All right, guys, welcome back to the Crypto Market Rundown. We have a jam-packed episode for you today, and we break down the three top industries that altcoins are soaring in, and one of them is because BlackRock is doing a tokenization fund that we break down. Brendan has all the charts per usual.
Yeah, that's right, Tivo. We're seeing altcoins move hundreds, in some cases, thousands of percent to the upside. We're going to be exploring exactly what some of those tokens are and the industries that you need to be watching out for.
We talk about base, all the memes going wild, and at the end of the show, we have a special AI announcement that just broke today, so you're going to want to stick around for that. The timestamps are below in the show notes, so you can watch what you want to watch when you want to watch it. We appreciate you watching this. Give us a like, drop a comment, subscribe, and enjoy the episode.
Welcome back, everyone, to your Crypto Weekly Market Rundown, where we talk about everything that's happening in the great world of cryptocurrency, from the technicals on the charts to the fundamentals in the news. We spend the time doing hours of research so that you all don't have to. And once again, we're coming back with a bit of an emotional roller coaster of a week over here. We have three verticals specifically that I want to talk about in today's rundown because some sectors are running and going absolutely parabolic. We're going to be talking about that in today's episode. Other sectors are lagging behind a little bit, but the whole crypto market, we went up to new highs, we fell back down, we started recovering. Today, we're getting a lot of volatility. I literally started off the day by looking at my charts and seeing Bitcoin breaking out the 72K, came back after a shower. We were down to 68K. At the time of recording this, we're back at 70K. So, man, a lot of volatility, a lot of stuff happening, and I could not be more excited to talk about it. But before we do that, Tivo, how are things looking on your end? Are you seeing what I'm seeing?
Yeah, a lot of volatility both in the crypto markets and the stock market is getting pretty excited as well. Like it's a full bull. It's a TiVo full bull.
Yeah, yeah, it really is. And I think that we are primed for new highs. And I've brought up the whole ETF side of things quite a bit because looking at those inflows and outflows are super helpful in determining where the market is going. And I did a pretty cool study over the weekend showing that there's basically been three parts to this ETF. And maybe we can look at this once we get into the charts and the analysis. But to give everyone a bit of a sneak peek, if we break down the ETFs into three parts, being the first part, the middle part, and the last part, we see in that in part one, there is a giant amount of outflows on a daily basis from Grayscale. We're talking 3, 4, 5, 6, 100 million a day. Part two, Grayscale brings their selling down on an average of 50 to 150 million a day. And that's when Bitcoin is ripping, just tearing in price, going from 38K to 74K. And then in part three, Grayscale ramps up the ETF selling again, and the prices fall from 74K back down to around 60K. And that's where we're currently at, is with them selling off quite a bit. And so I want to talk about that again because I still truly do believe that when the Grayscale ETF outflows pivot, I think Bitcoin is going to see a just gigantic rise. It's going to be a historic breakout. We're going to see Bitcoin's price break all-time highs, and I think that we're going to just continue on this really strong path to the upside. And the one thing that's hindering us is those outflows. And as soon as that lowers, it doesn't even have to pivot from outflows to inflows on Grayscale's end. It just has to stop being, I would say, roughly above 300 million a day. And so long as the outflows are less than roughly 300 million a day, I think Bitcoin is primed for some nice upside movement. So yeah, overall market sentiment here, Tivo, we're looking at the charts. We're kind of touching back against the $70,000 area. And everyone's asking, was that the pullback? And I think that it very well could have been. Now, as we'll get into the charts in just a little bit, again, if you want to see all the visual stuff, we got a lot of charts, a lot of information that we're going to be flashing up on the screen in today's episode. So quick little reminder that if you are listening on Audible or Apple Podcasts or Spotify or wherever, and you want to see the video side of what's happening, you can check us out on YouTube as well. And feel free to leave us a review, if you like the content that we're putting out there for all of you. But if we look briefly at the Bitcoin side, right? Bitcoin has broken above the 20-day moving average again. It never even touched the 50-day. And I think this is probably a good time to actually segue into the charts themselves. But Bitcoin, while it never broke the 50-day moving average down here, Ethereum, on the other hand, actually came all the way down to the 50-day moving average and saw a really strong bounce off of it. And so we're going to kick things off with these two. So with Bitcoin breaking the 20 here, it went down to this rising support level that we have seen, kind of starting at the previous consolidation zone around January. And so this is where Bitcoin pulled back the first time in that part one of the ETF pullback that I was talking about. Part two is this rise that we see up here. And then part three is this most recent pullback over here. And so we have this nice rising level of support over here on Bitcoin, where Bitcoin has come down to this level, bounced off of it, came down a second time, bounced off again. We've come down a third time now, and we're bouncing off this same support level. Now, Ethereum's a little bit different, right? Ethereum's still, very much forming the overall macro higher swing highs, or higher swing lows rather. But Ethereum broke the 20 and shot straight down to the 50. Now, if there's any kind of a reaction that we want to see off the 50-day moving average, it is a bounce like this one. So we went straight from the 20 to the 50, now right back to the 20-day moving average. And guess what? We're using this area as resistance, which is to be expected, right? When we are coming back and testing a level like this from the downside. So Ethereum's kind of stuck in between the 20 and 50-day moving average here, kind of just ranging. But I do see like the macros here still pointing very much towards the upside. I mean, if we zoom out and we look at things like the RSI has had a healthy retracement, so is the MACD. And I think that we can look at these on some of the larger time frames, since they are lagging indicators, to get a little bit of an idea of like, hey, is pressure falling off? Is pressure ramping up? Because what we want to see on the indicators like the MACD and the RSI, for our candle charts is like we want to see these coinciding. We want to see these in agreement with the candle chart. And so we can use them as confirmation. And I would say that they are giving us a decent amount of confirmation saying that, we could have a little bit of downwards movement. But I think that the bulk of these lows could very well be in. And that despite even maybe a little bit of pullback of what we could see on Bitcoin going a little bit further down, I think that this is going to be the local low of around 60K. And that, again, the longer that Bitcoin kind of consolidates and continues to break back up here, the more convinced I am for the bulls. I think that if there was a time for Bitcoin to have crashed below, it would have done it. But it didn't even break below its previous pullback low of around 58, 59K, right? About a couple of weeks ago, when Bitcoin had that 1 day pullback where it did like $11,000 or $12,000 all the way from like 70,000, 69,000 all the way back down to like 59, 58,000, like that was a nasty pullback. And even with this more extended pullback that we've seen over here, it was still higher than that previous low. And so Bitcoin is still being very methodical. And that's basically a long way of saying that I'm overall bullish about the mid to long term. Obviously, in the short term, I think we can get chopped around a little bit. We are getting quite a bit of volatility over the past week or so. But I think the mid and long term are still looking pretty optimistic for Bitcoin. And Ethereum is one of the things that I have been kind of tweeting out about because Ethereum's been lagging behind Bitcoin a little bit. Today's a great example of that. And what I mean is that like Bitcoin, for example, is down 0.2% today. Well, Ethereum is down 1.2%. So when we look at the green days, Ethereum is typically being less rewarding than Bitcoin. So if Bitcoin's up 1%, Ethereum might be up like 0.5, 0.7%, but it's usually less than Bitcoin. And on the red days, Bitcoin is down less than Ethereum, but Ethereum's down more than Bitcoin. And so the way that this coincides to something like Bitcoin dominance is that Bitcoin dominance is remaining quite strong here. And I find this surprising. And we're going to talk about why, because we have all these other sectors exploding. But Ethereum dominance is still really squeezing back down towards the bottom of this massive support area. And so if we look at like Ethereum compared to Bitcoin here, this has been a pivotal point for Ethereum in the past, going all the way back to October, right? We've seen it come down, test this level, and bounce and bounce and continue to test this. And every time it's bounced, my fear here is that they are, the Ethereum supporters, the Ethereum bulls are eventually going to become weak the more and more that this is tested. And I feel like the buy walls could just be getting eaten away with how often this has been retested over the last 6 months or so. And so when we're looking at this, Ethereum is definitely getting outperformed a little bit by Bitcoin. It's nothing crazy. It's nothing massive, right? It's not like I'm long-term bearish on Ethereum or anything like that. It's actually quite the opposite. I think that a big catalyst as to why Ethereum is getting outperformed by Bitcoin is largely due to the ETFs, right? I mean, we've seen billions and billions of dollars of inflows come into those ETFs, and Ethereum doesn't have one yet. So it doesn't have that same kind of exposure, and it doesn't get to have those same people put money into it. Because when we look at the ETFs, it's a whole different like genre for the most part of an investing class. It's people who don't want to go and buy their own crypto. It's people who are comfortable using their traditional investing methods. They're known ETF providers, and so it's a different demographic. And that's something, while Ethereum doesn't have it yet, I think it will have it. And when we're looking at like why Ethereum is getting outperformed by Bitcoin at an area like this, I think that that's a pretty large and contributing factor as a whole. So remember this Bitcoin dominance chart. I'm going to flash it up right here. Remember this, rising over the past, 3, 4, 5 days now. It went up from around 53%. It's up to 54%. And I know that's not anything insane, because dominance tends to move a little bit slower than our average candle chart. So 1% move on dominance over the last 4 days isn't wild, but it is pretty surprising. And we're going to, get into that in the next section here when we talk about all these different altcoin verticals that are popping off. But yeah, I mean, Tivo, has anything stuck out to you on the macro side?
Yeah, I mean, definitely range bound. I feel like
Yeah.
I like when Twitter kind of has debating sides. So there's definitely some people that kind of were loading up on longs around that 60, this when we dropped down to the low 60s. I know you mentioned that as well, that, a week or two ago, that you said it before the dip. You're like, hey, if we see it down here, that might be time to load up. So I've seen some of that, and then I've seen the opposite, where the capo of crypto, he's been taking the brunt of his bearish calls over the last year or so. And so there's people like that are still coming out saying, hey, like there's a lot more downside to go. It's the sentiment there, I don't think is as doesn't get as much rally behind it, but as much as the bull case does. There's a lot of trolling going on for people that are calling for 40K Bitcoin, but you do still see kind of two sides of the boat, which I think is a good thing. That's healthy. And it kind of goes back to, as much as we do see a lot of just general interest in the space, I still don't think that, the average person, as much as they're definitely hearing about it and dipping their toes in, I don't think that there's that wild FOMO that happened, last cycle when we went from 45 to 69,
Yeah. And one of the things I'm interested, if you can pull up a chart on it, doesn't have to be right now. But like what social activity is looking like, because I've heard through the grapevine that social media activity and search volume and stuff like that and view count on social media is all going up for the crypto sector, which is something that we mentioned several times since we started this thing. But it's one of those metrics that we've been watching out for. And we've been like, hey, we don't think the top's in, because there's just not the interest that we've seen in the past. And so despite prices rising, we're nowhere near what the top could be, because typically we see search volume and different social media metrics hit new highs, and then we're like, all right, the top might be near. But for a while, we really haven't been near that. And so Tivo, while you find something for that, I'm just going to briefly show a chart
No,
that
we
I
got
was
it. We got it.
reading.
We got it. You want to bring up the old school Google Trends? I mean, we did this for weeks and didn't see much of a change. So it's actually good that we're
Throw it up.
revisiting.
Throw it up.
It's good that we're revisiting. Check this out. I mean, this is a year. This is
There it
over a
is.
year. Blue's Bitcoin. The red / orange is crypto. So here's our Bitcoin ETF. And then here we were down here. And this is when everybody was like, oh, the Google Trends, it's dead. It's a dead metric. Sure enough, all-time highs right here. Boom.
Wow. That is
March.
all-time high. Or is that just like local highs? How far does that go back?
This is March 3rd through March 9th for the Google Trends
Wow.
data. It's the low.
Wow. So yeah, I mean that's highs. Where can
Oh,
we?
I'm
Is
sorry.
it
Not
possible
I
to
didn't
show?
mean all-time highs as much as this is when Bitcoin hit all-time high that week, and so our data, the
Wow.
data's back. I can bring this 2004 to
Yeah, let's go.
present.
Like,
So here's
let's see. Yeah, I
all-time.
mean, yeah. Look at that. I mean, we still have a ways to go if we want to hit like social media searching in terms of all-time high. Wow.
I would say that, yeah, I will agree with the people that don't want to use this anymore. I will agree. Like, I don't think you're going to hit the 2017 all time high in the sense that people just kind of know what Bitcoin is by now. Like, I think
Yeah.
that high is definitely for the people of like, what is this thing? I think most people know or
Yeah.
have heard of it now, and they're more checking on price or seeing news updates. But I wouldn't be shocked to get, back to the 50 mark on this chart at all if we really start rocketing.
Yeah, and I think you make a great point. Like a lot of people now understand like what Bitcoin is and what cryptocurrency is, and they don't need to go Google to find out like what it is at a very basic level because now you have a bunch of traditional media, whether it is podcasts or news or TV or whatever it may be, even their financial advisors, they've probably heard about this stuff in other sources. So I think you're right in that we might not see that all-time high again because there's not a need for it. In the same way of like, I'm sure that there's like been a decline in anything that's like technically savvy. Like most people now, they know how to go read their emails and operate an email. And so not a lot of people are like, you know, how do I send an email tutorial, right? There's definitely people that are out there, but it's the same thing. Like, right. As technology in different industries are around for longer, people become more accustomed to them. I'm sure when the smartphones came out, everyone's like, how do I operate this thing? It's touchscreen, it's weird, it's this, it's that. Fast forward to the current day, no matter what kind of touchscreen phone you have, most people can operate it in a usable manner, right? They can make a phone call, they can send a text, they can download an app, even if it's an Android and they've used Apple their whole life. So, I think it's a solid point. And before we move on to those altcoins that I really really do want to talk about, let me just flash up this chart that I have here because I think that a lot of people are going to like this, and I don't think we brought it up last week. We've maybe alluded to the idea, but I was working on this double sided chart, and so on the top you can see the Bitcoin ETF outflows and inflows, and then on the bottom you can see the price of Bitcoin. So again, top is the outflows, bottom is the price of Bitcoin. And what I did here is I compared the Bitcoin ETF outflows and how they impacted price. And again, we have parts one, parts two, and parts three as they correlate to parts one, two, and three as labeled on the top and the bottom. So in part one, when the ETFs came out, we saw a wild amount of selling pressure from Grayscale, 400 to 600 million and daily outflows. What happened to price? Well, price declined during that same period towards the end of January, and you can see this. And then during February, when the outflows were the lowest, they went from 400 to 6 million a day to around 50 million to 175 million a day for the bulk of February. And you'll see that on this chart for the bulk of February, Bitcoin was skyrocketing in terms of price, making the run for the all-time highs. Then in part three, when the outflow started scaling up again and going to 300 to 600 million in daily outflows, well, Bitcoin's price started rejecting the previous high over here and started declining again. So what does this mean? Well, it means that Bitcoin's price has had a clear correlation to the level of outflows, and it makes sense because these are spot Bitcoin ETFs, and they have to sell Bitcoin or buy Bitcoin whenever there's inflows or outflows. And so this has just been one of those big things that I'm watching, and that's why I've talked about this a lot, so I don't want to rant about it too much. But man, I think it's a very important metric to pay attention to because I've said it before and I'll say it again. When the ETF outflows pivot or slow down, I really, really do believe that Bitcoin is just poised for this, gigantic run to the upside. And I think it's going to be one of those things that when it does happen, we're not only going to see new all-time highs. I think I see 75K breaking. I potentially even see 80K breaking if we can get these outflows down to a much more reasonable and manageable level, like below 100 million, like they were back in February. So that's my 2 cents on the matter. And there's definitely a lot of things to watch out for. But one of the other
One
big
one more
things,
one more thing before we transition. So I was fooling around
yeah,
with Google Trends, and I'm sorry I didn't do this, but I found something extremely interesting. Let me share my screen here. So we were doing Google search terms, and I just flipped it to YouTube search terms, and we've found some really interesting data here. So the blue again is Bitcoin, the red orange is the search term crypto, And so you can see the blue hits that 50. So that's the highest that it's been since 2017. And then the
Wow.
search term crypto on YouTube is currently at all-time highs by a lot.
That is wild. Wow. Yeah, I mean, talk about talk about interest. The people, so it kind of goes back to the point that we were talking about, right? Like people are going to other sources. People are hearing about crypto from other sources than Google.
Yeah.
And yeah,
Or
I mean, it's
they're
great to
trying to
see.
I guess, and that kind of stems. I mean, we've seen it with our YouTube channel getting a lot more views recently, which is great. But I guess
Yeah.
people are really interested in trying to get some of that alpha exposure to altcoins is kind of what I'm thinking for why that crypto is just rocketing. I mean, that's huge. The other high that's at, and this is
It is.
2008 to present, 94 compared to the other high was 71 back in May 21.
Wow. Well, it's definitely exciting to see the social metrics for things like YouTube just it's literally skyrocket to new highs.
It's kind of
And hopefully
surprising.
price.
I'm a little surprised at that, honestly.
Yeah,
Interesting.
it is. It is surprising. I guess it makes sense. But I mean, hey, if the algorithm is pushing the crypto market, then you're not going to hear me arguing.
Nope. It's all those. I know we're going to talk about this later. It's all those how to get on base tutorials.
Yeah, for real. Oh, well, I mean, I think that's a good segue, right? You know, we've we've referenced that there are these three industries inside crypto just popping off. Now, let's talk about what the three are. Number one, real world assets and tokenization is going parabolic, and we're going to explain why. But number two, it is the base network. It is a layer two for Ethereum, much like you have Arbitrum and Optimism and Polygon and all the other ones out there, ZK Sync. Base is Coinbase's layer two, and it is getting a ridiculous amount of attention. And all those projects, not all, but most of the projects in that ecosystem are also going just completely parabolic. And then number three, one that we referenced last week, meme coins. Now, meme coins is probably the one that I'm the least fond of, right? I don't do the most meme coin investing myself, but you know, it's hard to ignore the social trend that is happening there, and that meme coins they're shooting, especially on Solana and Coinbase. And you know, they're doing all right on like Ethereum's main chain and stuff like that. But when I think of meme coins now, the two big areas for them where they're getting the most activity is Solana and Coinbase, or not Coinbase, Solana and Base, like the layer two. And there's all these wild stories of people being like, yeah, I put in $300 and I came out with like $1 million, or I put in like $1,000 and now I'm a multimillionaire. And it's all these wild stories. And I see them circulating around because meme coins are just going crazy. Now, I think it's worth referencing here that for every one story that you hear of that, of someone putting in $100 and coming out with $1 million or something like that, there's 1,000 people that lose like everything on them. And so, you know, some people are really good and they can make it work consistently. But the thing that I want to kind of stress here is that for every one person that you see make a like 100,000 or 100,000% gain, where they're doing like 100x or whatever, for every one person that does that, there is hundreds, maybe even thousands of people that don't get those returns and they end up on the opposite side of the spectrum. So, quick little preface that the meme coin area is volatile and it is risky. And while it is very hype right now, you definitely got to be careful with your money, because one day you can be at $1 million and then the next it can get rugged and you're back to zero. You're back to square one. But let's kick things off with RWAs first. Now, what are RWAs? You know, why does it matter? Why are they popping off? Well, it stands for real world assets, and it's a two-sided coin where you have real world assets and then you have tokenization. And so what this is this is the process of bringing exactly what it sounds, real world assets, whether that is art or real estate or your car or bonds or treasuries or stocks or, you know, whatever it may be, a real world asset of some sort. And then the second step is tokenizing that asset, which brings it onto the blockchain. So, you know, say a piece of real estate is this awesome Airbnb, you know, it would cash flow great. And You just don't have, $1 million to go get that Airbnb. Well, that Airbnb in theory could be tokenized, and then now, let's say that there's 1,000 shares of it. Well, you could now be a fractional owner of that, like Airbnb, of that property that's printing money, without having to go and do it all yourself and getting a loan for $1 million, or shelling out $1 million up front. Now you can be a fractional owner of it. Whether you just own like 1.72 of the 1,000 tokens, or maybe you own 10 or 100 of the 1,000 tokens that represent this Airbnb. And so you can have fractionalized ownership of these assets that were previously really hard for traditional people to get a hold of. So it opens up liquidity, and it also opens up investing avenues in the addressable market for a bunch of different assets. And so we've seen big names like JP Morgan, we've seen Bank of America, Citi, BNY Mellon, and most recently, the big one that caused the catalyst here a couple of days ago was BlackRock. BlackRock came out with a new fund called the BUIDL Fund. Now, this is an homage to the traditional HODL saying, right? HODL being a slang word in the crypto space for hold, and BUIDL being a word for build. And so they have this new fund called the BUIDL Fund, and it specializes in the whole tokenization space. And so this is something that we're seeing, that like all the big players in TradFi, and even in decentralized finance, they all want in on the real world assets and tokenization space. Again, we mentioned BlackRock and BNY Mellon and Citi and Bank of America and all these other players that want to get in on this stuff. And with BlackRock saying, hey, we're actually going to create a fund for this, we're going to be doing this ourselves, everyone's like, man, this RWA and tokenization narrative is likely here to stay. And the space as a whole, what people are calling, has the potential to be this multi-trillion-dollar industry. It's only worth like a couple billion right now. And so people are saying that there's this giant disparity. And, as we'll get into the charts, these things are just taking off in terms of their valuation. So let's look at a couple of these. Full disclosure, we have some exposure to these things. So just want to be transparent with everyone that is listening. But to just kind of show the charts of what these look like, if we go down, there's a couple of them over here, like Centrifuge. Just again, really giant upturn in recent days. Goldfinch, also going parabolic. Ondo, another one, just going parabolic. Maple, parabolic. Rio, Basan. Like, you look at all these different real world assets and tokenization platforms, and they are just skyrocketing, like hundreds of percent in the last few days over here. And that's because this narrative is becoming a little bit more like maybe accredited is the right word. Like, people are feeling a little bit more secure in this narrative now, and they feel like it really is here to stay because all these other big players are starting to enter into it. So, I mean, Tivo, have you kind of seen the craziness that's happening over here?
Yeah, I mean, the price action's wild, but it makes sense, especially with BlackRock leading the charge. And specifically, I've seen Larry Fink, their CEO, kind of go on a little bit of a press tour, obviously promoting the Bitcoin ETFs. Everybody's kind of talked about that. I haven't seen him too much focus on the tokenization project that they're doing, but I've heard his rhetoric. And we've talked about this offline, but I found it so interesting. The last couple interviews I've seen with him, he's not pessimistic on America per se, but he kind of is giving like a different look, because I feel like throughout at least my lifetime, these big bankers, your Jamie Dimons, if you're head of Citigroup, if you're head of Bank of America, these people come on and they just talk about how strong the bank is and how strong America is, and that we're the most powerful in the world, and we are all those things. But like Larry Fink is taking a little bit of a different approach, where he's like, hey, I think we're at a on the cusp here of having to look at things differently, and we need to respect our youth, and they're looking at their situation differently than maybe how we came up. And it's been interesting rhetoric hearing somebody as powerful as him speak like that, because you don't really hear that type of rhetoric of almost kind of a conditional support for other generations coming from somebody who's older and as successful as him personally, and then as a business like BlackRock is professionally. They're looking out and saying, hey, the future is going to be different than the past, just like it was when we were 30 years old, and just starting our careers. We wouldn't have imagined what we are today, and we need to take a look at that for our 20 to 30 year olds now, and we need them to participate in the investment system, and we need to understand that their situations are a lot different than ours, and inflation and the debt and social security, like these are all things that is definitely talked about on the online forums, but is very rarely recognized by our politicians and our bankers. And I don't know, credit to him for, he's obviously talking his book a little bit because of the
Yeah.
Bitcoin ETFs and the tokenization funds, but I don't know, credit to him. It's nice to hear somebody in power like that talking with a little bit of different rhetoric.
Yeah, it is. And it just goes to show that like they're getting with the times. Like they're not stupid. They're not ignoring the trend. They have very, very smart, one would argue, probably some of the smartest analysts in the industry since they are the largest asset manager in the world. Like they're very aware of what's going on here. And like you said, like they're trying to get with the times. They see what like the younger and the future generations are interested in. And they're looking to capitalize on that where maybe some other players aren't, or they're lagging behind. But man, they've been really self-aware of what's been happening, and they've been doing a pretty good job of capitalizing on it. So I think you're right in all that sense. And yeah, we'll continue to cover this space. I'm sure we'll get a lot of updates, but today's kind of, or this week rather, is like the first week that we're really seeing things specifically in RWAs go parabolic the way that they are. So we'll touch back on it here in a future episode. Well, let's talk about area number 2. We have Coinbase, or I keep calling it Coinbase. We have Base, the base layer 2 from Coinbase, doing equally as good. And what I mean by that is if you look at the industry, and let's just look at like one of the leaders in this space, because when we think of Base, there isn't a ton of, and I might get some hate for this, but there isn't a ton of like really reputable projects on Base yet from like a fundamental standpoint. From meme coins, they're everywhere. Like the bulk of Base's activity and other stuff is coming from meme coins. But one of the reputable ones is Aerodrome. And they have like 44%, at least in my opinion, I think they're reputable. They have 44% of Base's TVL. They're like one of the largest dexes on Base. They're kind of like the Uniswap for Base, so to say. And man, they have been just skyrocketing. We looked at RWAs and how well that they've been doing, but Base projects have been doing equally as well. And I mean, you look at this thing since the end of February, and it's up like almost 2,000%. Even in the last like week or so, I mean, it's up, and I'm trying to measure this, but it's giving me a hard time. There we go. It's up like 200% in the last like week and a half. And so Base is taking off, and people are saying, well, how can we get in and get exposure to the Base ecosystem? And one of the ways that they're doing that is by looking at infrastructure, which again, there's not a lot of infrastructure built on Base yet. There's a lot of meme coin and other projects. But I think that that's something that we'll see more of. And so while, right now it's pretty heavily dominated by meme coins, I think that as time goes on, we're going to get more like reputable infrastructure, like 2 projects that are outside of the meme coin space start getting built on Base, especially after the rise that they've had. Now, some
Aerodome's
other
one of those
interesting metrics.
projects. Aerodome's one of those projects that like you're just like, oh yeah, the team found it and we were talking about it in our chats, and it's like, oh, I'll just do a little sprinkle. I'll sprinkle a little bit on that, and then all of a sudden, like 3 weeks later, you look at it and it's one of your like top 5 projects. You're like,
Yeah.
oh shit,
Yep.
this thing's going nuts. But we'll explore more on this because I did secure, I believe, an interview for us. In 2 weeks, I believe we're going to be interviewing somebody from their team, so you're definitely going to want to stay tuned for that. To learn more.
Big news. Yeah, I mean, an interview with them I think is going to be perfect because, I mean, man, they're popping off. Like we said, 2,000% in the last like month and a half, 2 months now. And they're one of the biggest TVL contributors on Base. So stay tuned for that interview. It's going to be a killer one. When we look even at like some of their on-chain metrics, TiVo, going crazy. So if we go over here to the optimistic roll-up section of the block, we can see that their unique daily addresses skyrocketing. Like they are the player over here. When we go and we look at even their transaction count, they are way past optimism now, but they are like rivaling Arbitrum. And they've passed Arbitrum in the past, and right now they're making a run for it, saying, hey, we really want to pass Arbitrum. And so they're very quickly becoming like the go-to. This is wild to say. They're very quickly becoming like one of the go-to layer twos for Bitcoin. And I think I've mentioned this before, but I've talked to someone who was recently using, I think it was like Arbitrum or Polygon, and they're like, yeah, we left them to use Base because they talked about all the traditional financial connections that Base had and how it's linked to Coinbase very easily. And if they need to like get money in and out, it's just very easy because of the features that Coinbase has on making a seamless integration and transition into Base. And that kind of stuck with me, being like, like that makes sense. They have this onboard and off ramp that is directly connected to the layer two itself. And it's always been something that stuck with me. So when we're seeing that their unique addresses, like their user base and their transaction count, which represents activity, when we see both of these metrics just going skyrocketing, it doesn't come as too big of a surprise to me. Now, this is another chart that I saw, just kind of again showing like the revenue and the metrics behind Base, and they were pretty low for a while here. And then, boom, you can see that towards the end of March, just drastic increase from the Base side of things, which is another really cool thing to see. And then when we look at like their TVL, for example, we've referenced this. TVL on Base is going just parabolic within the last month or so here. So it was pretty low for a while, right? We hit September, they had a nice boost. They're in the 100 millions. Well, now they just hit over $1 billion in TVL. So if we zoom all the way into where we're at right here, at the beginning of March, they were around a $500 million TVL, and they've doubled that this month. So now they're above $1 billion, which is a big old mark. And we can see here that the number one contributor to that is Aerodrome, then Uniswap, then a couple of other players that are probably a little bit more familiar as well. So I think it's one of the, it's probably one of the narratives to keep an eye out on. It's getting a ton of activity. And I think that that's like the metrics that we always want to use to measure like what we're interested in. Like, what is the masses interested in? Where are people the most active? And right now it's Base and real world assets. And that leads us into the third topic here of just, again, meme coins. They're still going strong. And one of the biggest pushes that we're seeing there is on Base, as well as Solana. So lots of activity, lots of stuff going on. And again, those are just the three little subsectors of crypto that I am trying to pay a little bit of extra attention to.
The meme stuff has just gotten a life of its own. I mean, I know it kind of always has, I guess, in past cycles, but I just feel like it's even more. Like every day there's something new, and there's a lot more comedy behind it too. Like the old one was just like the dogs or an animal or something. There's some shots of like real world cultural jokes here that I think is just so funny that and then just people are eating it up.
They are, man. It's funny. I've seen people call this like the meme rally, the meme market, because of how much activity and network the whole meme space is pulling in here. And right now it's like it definitely is like one of the biggest driving factors when you look at like Solana and Base activity, for example. Like those spaces have blown up, and largely due to memes. And it's not like they don't have other stuff, right? Like their existing networks, they got a lot of other stuff going on there. But when I mean like sheer activity, a lot of that is coming from the meme space. So
And I guess that might
it
be a
really
good
has.
segue. No, sorry, finish your point.
I was going to say it's really evolved into its own little industry.
No doubt. And I think that segues well into the next part of Wall Street kind of betting against crypto in general. We're not talking about Wall Street bets, we're talking about actual the big dogs on Wall Street. So if you go to the crypto stocks like your Coinbases and MicroStrategy, we found a stat of how much short selling there is against these stocks. So there's the measure of how densely shorted these stocks are. The average for this, it's called a crowded score. So the crowded score on average is about 32. And for the crypto stocks in general, all of them, it's about 57. And then when it comes down to MicroStrategy and Coinbase, they have a squeeze score. So kind of how likely it might be able to get this thing to squeeze. And the average for that is 34. And MicroStrategy, Coinbase are coming in at 78. So despite kind of the bullish run that's happened over the last couple months, and all the bullishness around memes and RWAs, whatever, there's still a large portion of your Wall Street traders that are taking the opportunity to short these stocks, which is just, I think, interesting on many different levels of, obviously that's the non-belief of the sector as a whole. Also, is there, a potential for, as if this thing keeps rallying, what happens to those short positions? Like they said, the squeeze factor there is more than double what it normally is. So it's interesting.
It is. It's almost ironic that you have like certain big players like BlackRock and JP Morgan and Fidelity and Mellon and Van Eck and all these other players that are like, hey, we're gonna bet big on crypto. And then you have some of these like hedge funds that are like, we're gonna short it to the max. And it almost reminds me of the like GameStop scenario, right? Where GameStop was running and everyone was shorting it and the hedge funds were getting wrecked and it just kept ripping. And this could be another one of those scenarios. And maybe they're just hedging, right? Maybe they're playing both sides and they're just hedging here because things are high. And I get that. It's pretty normal from them. So who knows, right? It's interesting, but
For sure, but dude, there's people that come on, and there's that's what makes a market, right? It's two different sides, but
yeah.
there's definitely people that still come on TV and just, especially talking about Coinbase. I can't remember exactly the guy's name, but I can picture him, and he's come on since October, November, and then came back on in January, and through this run up from 35 to 70, he just goes, Coinbase is garbage. The underlying business model doesn't make sense, even like it's overvalued, and he's touting like even if the ETF gets passed, it's a death sentence for Coinbase. Like that was his type of rhetoric. And I think we would agree that like the ETF is not a death sentence for Coinbase. If anything, it's actually more bullish because there's more activity on the network and base. Like I think some of these people, somebody like him might kind of just be somebody who's not really educated on what Coinbase is or does, and the whole
Yeah.
ecosystem of what everybody's truly interested in. He just kind of looks at Bitcoin as something that he's not a fan of, and then so anything associated with Bitcoin and crypto is all garbage. You'd hope they'd do more research before putting people's money into positions, but I don't know. That's what makes a market.
Yeah. I think you're right in that like I think some of these people just aren't completely educated. And I think that their lack of understanding leads to frustration. And then that's where we see them talk like that on like TV and stuff. So that's my thoughts.
Yeah, no, I just thought it was interesting because you still see people come with that type of attitude and rhetoric that doesn't change, and you just kind of feel like, hey, if you looked under the hood here, I feel like not that you change your opinion and want to go buy Coinbase by any means, but maybe
Yeah,
just think about it differently. Um,
for sure.
but yeah, speaking of education, we all need to educate ourselves on AI, whether you're in the workforce or in the technology investing space. And there was some big AI news that actually came out, what's today, Wednesday. So Wednesday, the 27th, this morning, when I woke up, I found some tweets and forwarded over to you guys. So something interesting there, Brendan.
Yeah, I mean, for anyone who's plugged into the AI space, you're going to be familiar with AGIX, Singularity Net, Ocean Protocol, and Fetch. And what we found out this morning is it looks like all three of those, like arguably the three biggest players, most well known players in the crypto AI space, it looks like they're going to be merging. And that was not something I had on my checklist board for the crypto market. But yeah, I mean, man, it looks like AGIX, Ocean, and Fetch are all going to be merging into a singular project here. Now, they've said that they want to do this and combine like all of their knowledge and all of their resources and all of, everything to rival the traditional big tech industry through their decentralized, manner. The ironic thing here, and I'm not hating on it, I like all these projects actually quite a bit. But the ironic thing here is that they're saying that they're doing this in the name of decentralization rivaling centralized big tech. But by combining AGIX and Ocean and Fetch all into a singular source, that is like the definition of centralizing something, is combining all these biggest competitors in the space, which they're kind of competitors because they're all in the AI space, but they all do a little bit of different things. But by combining all of these into a single project, you're centralizing three into one. So I think it's a little bit ironic that they're saying that they're trying to counter the centralized big tech space by centralizing the decentralized players. Um, but overall, I'm a fan of all three of these projects. So I'm not against it. I definitely want to learn a little bit more. I think that with this news just breaking, we're going to get a lot more information. But it's something that I'm pretty interested in. Again, I just really want to know more about the details of this before I might go investing. I know on the news, it seemed like it was really well received. You go look at AGIX and FET and Ocean, and they all had a really good rally in correlation to the news. So that tells me that the holders, the supporters of these projects are excited to hear about this. And if that's the case, then great. But I think like watching how the public perceives this is also going to be pretty important, which right now it seems like it's going to be a good thing. So all the
Yeah, I
power
think
to them.
from a business perspective, like we're definitely in the first inning of AI or whatnot, but we're not at the starting gate. We're definitely out of the starting gate because we have real world products already available. Your Chat GPTs, Grok from X, Microsoft, I guess using Chat GPT or OpenAI launched a business AI. I can't remember the name of it, but it had a Super Bowl ad. So there's products already out there available, is what I'm trying to say. And so maybe these smaller companies, and again, this is my opinion of a broad level look at it, is like, hey, there's already people that are out of the gate and have products like. So it's kind of like a partnering game now. Like, how are we going to compete with these? OpenAI has been doing their Sora. They've been putting out some Sora demos, which is their video stuff, which kind of looks unbelievable, honestly. And so these
Pretty
companies,
wild.
yeah, that thing's wild. But I guess maybe these companies are kind of looking around like, okay, we have a lot of investment, we have a lot of progress, but we're missing this or we're missing that to be able to create our product. So it's like, I don't want to say what's the end game, but like that next step for these companies and projects is like maybe they're looking to partner. And so are they going to go partner with Microsoft and OpenAI? Are they going to go partner with Elon Musk and X or Google or whatever? So those that type of move would be completely centralized as well. So I don't know. I just think coming together is kind of maybe the natural progress of consolidation for AI projects, because at the end of the day you can't have 5,000 different ones anyway.
That is true. That is true. That's probably been like one of the bigger gripes from people in the crypto space, being like, there's tens of thousands of mainstream crypto projects out there, and like that's just too many. And maybe it's not a bad idea to combine some of the ones that do similar things together and make it a little bit easier for the average investor. Because I know that's something that I've ran into before. It's like, okay, I have X amount of money set aside here, and I know that I want it to go into AI, but like, what AI project do I want it to go into? Because, like I said, I think AGIX, Ocean, and Fetch are all great projects. So I'm like, do I want it to go into AGIX? Do I want it to go into Ocean here? Do I want it to go into Fetch here? And now it's a little bit easier. It's like, okay, well, if I want to support those players, now there's going to be a singular project for me to do that going forward. So,
And does that mean,
yeah,
I know we're at the beginning of that announcement, but that means that if you have those tokens already, that it's going to be combined into the ASI token to start in some facet, correct?
yeah, exactly. So they were talking about the split that they're going to be doing. And I think they said it was going to be roughly like a 4 or a 0.433 to 1 split. The details of that are still getting worked out. But yeah, basically, like based on how many tokens you earn, you're going to be getting the new tokens, but there's going to be a different correlation because the new ASI token will have a market cap of like $7.5 billion, and it's going to have, I think, 2.63 billion tokens. So when it releases, they're aiming to have like a starting price of $2.82 per token. So, your tokens, the amount of tokens that you have will vary a little bit, but the amount that they're worth should stay roughly the same. And that's my understanding of the situation now. And that's typically how splits work. There have been splits in crypto, and there's been a ton of splits happening in the stock market from acquisitions and other stuff. But yeah, that's the way that, fingers crossed this goes down and it's smooth. But yeah.
Yeah, well, it'll be exciting to see how it works out, and maybe with them doing this again, like I kind of talked about earlier, is maybe they have a product, or some type of interesting launch when this finally happens, when they all get together, of kind of what's next and why they're doing it, other than just doing it. So that should be exciting to
Yeah.
watch.
100%. And I think that brings us to a pretty good close here, right? There's a lot going on, a lot to talk about, and man, we love talking about it. So all that we ask here is that if you like tuning in and you like these market updates on a regular basis, consider hitting that like or subscribe button if you're on YouTube. And if you're on like Spotify or Apple Podcasts or Audible or something like that, leave us a review. We love hearing from you. We love getting to know the community. So leave us a review on there. And we're going to be back next week at the same time, same place. So stay tuned, everyone.